The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. And we are going to start off the show with looking at Apple because I get more requests to ask me what's going to happen next in Apple than I get on anything else. So what I've decided to do was to post in that long-term weekly chart that we've looked at for many, many times over the past few weeks. It basically shows the A-B-C-D patterns that occurred since 2006. We've had 4 of those. The last one completed at the 392 level. Apple got to 385 on that opening that day a week or so ago, but it is held up relatively well, since that time, and we've moved, about $50 higher than the low. So the low is pretty much in, as near as I can tell, and the price objective, the longer-term price objective for this, and what longer term I mean, because this is a weekly chart, it might take 8 or 10 weeks to get there. But, if it can move $50 in a matter of, 8 trading days, it can certainly move another $50 in another 8 trading days, and it could be at $506 a share without any trouble at all. And that's the 382 retracement of the whole move down from 703 down to 582, the 38% retracement, which you would expect in a normal bear market would come in at that 506 level. And that's where the market broke down from. That's when we really became bearish on Apple, once it broke the 503 level. And that was because of the same reason. We had a 382 retracement after the butterfly top was made around that $700 level. And now we're rallying back, very, very strongly, at least so far. The good news today, if you're in the Apple, and that is the fact that we have taken out the highs that we made during the earnings report, where the market opened sharply higher and then, broke down very, very badly. And that gives a price of 440. We could make that by tomorrow. But I'll post that chart into Tiger TV so you can take a look at it. It shows the final A, B, C, D leg that we were looking at. This was going over the last 6 weeks. And it's a 30-minute chart, and it basically shows the A-B-C-D pattern that's known also as the Thunderbolt pattern. That's the one that H.M. Garley made very famous in his book, Profits in the Stock Market from 1937, and that's the function of how markets move. They either go up, down, or sideways. They don't change. I mean, there's nothing any different. I was listening to Basil on his show, and he talked about, he doesn't listen to the news. He doesn't know what they're doing, and it really doesn't make any difference, because it's the charts that really count, in my opinion. After 50 years in this business, I really believe that, because if the prices are going up, folks, there's more buyers. If prices are going down, there's more sellers. That's the bottom line. So this is what we're looking at. So the first price objective of this small ABCD swing would come in at the 440 per share level. We're trading at 431.5 roughly. Right now, up quite a bit in Apple today, up about 14 points. And this market is still incredibly oversold. I mean, these folks that have been out of Apple, or that are looking at new buyers coming in, or people that are still holding, they are starting to get a little bit of hope. And if this market starts to pick up a little bit in Apple, it could very easily, make that 506 level. And someone asked the question, is 506 going to be the top? I don't know that, and nobody else does either. We don't know what's going to happen next. The only thing you can do is deal in probabilities, and the probabilities say that the probability is that it's going to make 441 roughly in that neighborhood. We might get another correction from that level, but longer term, and I'm talking 4, 5, 6 weeks down the road, we could be at 506 or even higher. Remember, on the way down, the market was bouncing around, the 482, then it was bouncing around 452, and then 432. And then 415, and each time, each of those rallies that occurred were equal rallies. That's all they were. Each one of them was around $50, and it was still pointing to that 390 a share level, and that's where it finally got to. And so this is what we're doing. We're just looking at numbers, looking at patterns, trying to, get an edge, and that's what we're watching, with the Apple. So this is the process that you go through to determine, what the next level is, what the next level is, and that will come in around 441. We could be there today if we're at 431 already, and we're only half a day through the trading session. But I don't think Apple will be up $30 today. But who knows? Anything can happen in this particular environment that we're dealing in here. Now, on today's show, I'm going to be talking about several different things. The next topic that I want to get to, of course, is the Treasury bonds. I would like to talk about those for a little bit because I think that's the next really big move that we're going to have to the downside. And I would like to put a chart in showing the relationship between the high-yield bonds. I'm using the ETF for high-yield bonds, which is HYG. These are junk bonds, folks. The reason why they're known as high-yield bonds is Mike Milken at Drexel changed the name from junk bonds to high-yield bonds back in the late 70s, actually. He started at Drexel in 74, and he changed the names of junk bonds to high-yield bonds. And the reason is, I'm sure many of you might not remember, but at that time, interest rates were very expensive. In the 1980s, or in 1980, the T-bill rates were 13%. And so corporations could not borrow money. So the only way they could do it was to borrow through the corporate bond market, and that's how, Milken made his billions. But anyway, the spread that we're having now between the 30-year bond and the high-yield bond is about as narrow as it's ever been. And that means that people are willing to pay or willing to buy, the yield for the high-yield bonds just to get a higher yield, because the yield is only about a little over 2% now between the high-yield bonds and the 30-year Treasury bonds. And, junk bonds are, they're not called junk for, no reason. And, a perfect example we mentioned many times has been American Airlines. They're in bankruptcy, yet they're issuing bonds that the public is, gobbling up. And, American Airlines is probably going to come out of it. They're probably too big to fail. But, this is still a higher risk than if you're dealing with the 30-year Treasury bond. So you have to keep that in mind. The overall pattern, that we're looking at, in the Treasury bonds is, that longer-term one. I wanted to put the Treasury notes up first because these are the shorter-term paper, and it shows that we are, went up to that 61% retracement, and it's taken us, well over 6 weeks to make this level. And so it tells us that we're coming into some type of resistance, into the Treasury notes and also, the Treasury bond market. Both of those, are causing, some a little bit of consternation in the markets, and we'll see. Now, I would also like to post the long-term weekly chart for the Treasury notes because it also shows that, we're making this 61% retracement up in this area. And the only way that they're going to be able to get this market to the downside, in my opinion, would be the stock market to really back off, and start a very bearish leg. And believe me, with today's action, that solar eclipse and full moon that we had on Thursday, didn't affect the market at all. It was only down a day. So none of the lunar things that I usually look at, are working. So something is pulling this market higher. And, I don't know how high it's going to go, but all I know is that it does want to move higher. Someone asked a question of, why, can Apple go up, and the stock market go down? Look, Apple went down from August all the way down into April without any trouble at all. And, that's the they can certainly go up with the stock market going down because, remember, it's a market of stocks, and they call it a stock market, but each stock should be looked at separately. And I think Basil did a good job talking about JCPenney's when he was on because, that stock was very oversold and was due for, a really good rally. All we're looking at here is, the stock of Apple. And we did a pretty good job with Apple because the last, 5 or 6 weeks we were focusing on April 19th, and all we were doing was looking at the number of days down in the AB leg versus the number of days down in the CD leg, and they were exactly equal. When time and price came together, on April the 19th, and that low that day was 385, and we were looking for 393 was the per share is what we were looking at. So it was in the ballpark of what we were looking for, and now we're waiting for to see the next rally. The bullish part of Apple is today, because we've taken out the highs after the earnings. Remember, the market gapped up that day at 428, and then it backed down to the 786 retracement down to 392, and now we're completing that ABCD up at the 440 level, and then we'll see what the next leg will be. Now, if you're in the calls, what you need to do is you need to get out of some of those if we get to 440, because the premium will start dissipating and you won't make nearly as much. You've got to sell those on strength, and then move out to a different strike price if you want to do it that way. If you're in the stock itself, that I know some folks are, you can put your stop at break even and tie your horse on the tie your stirrup on the saddle and let her ride, because Apple has a chance to make 506, and that's $103 move off the bottom, and that doesn't mean that 506 is going to be the top, because if you look at that long-term weekly chart, there's nothing bearish about Apple, folks. Even though it dropped $300 a share, there was nothing bearish about it. It's still following a long-term trend. And people say, how do you define the trend? There's only one way that you can define trend, folks, and that is you must look at the time frame of what you're looking at. If prices are going down on a 5-minute chart, that trend is down. If the long-term trend on that is up, then it's up. If you ask what is the long-term trend of Apple, you have to say, if you're looking at the weekly chart, you have to say up. If you're looking at the daily chart, you have to say down, because we've been down since August, so it's been down. And if you ask what the chart is on the 5-minute chart, it's up. If you ask what the 30-minute is, it's up. If you ask for the 60-minute, it is still down, because we're still lower than we were, 3 or 4 weeks ago. So you have to define the trend by looking at the time frame. That's the only thing you can do, because if you look at a chart and you don't have any price axis and you don't have any time axis, all the charts are going to look exactly alike. So the only way you can define the trend is by, looking at that particular thing. Now, Basil does a wonderful job of using his moving averages, because he puts them together in a way that shows that they're making higher bottoms, you're in an uptrend. If you're making lower tops, you're in a downtrend, and that's another definition of the trend. And if you put that with the time that you're looking at, that tells you what the trend is looking at. So that's that's really what you need to do if you want to trade with the trend, and that's what everybody talks about. That's what you really need to be doing. Now, I want to give one more chart, and that is the regular Treasury bond chart. And because I was looking to sell the bonds, if we could get up to this 150 level, we've only got to 149.06 so far. We're going to take a little break, folks. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I want to take this short segment of the show to talk about the Japanese stock market because it relates to the Japanese yen. I posted the chart into the Tiger TV so that you can see the long-term weekly chart going back 6 years in the Nikkei Dow, and the fact that the last week's high in the Nikkei Dow came in exactly at the 61% retracement. So we're holding that incredibly well. And so what we really need to do now is to look at the because the trade that we were watching last week in order to trade the Japanese stock market without doing it with the Nikkei futures was to look at the price of the Japanese yen currency itself, and that's exactly what we were doing. We were watching this. I'm going to post it into Tiger TV because it's almost identical to the Apple chart as far as harmony and everything, but it really shows the beauty of the relationship between the numbers that we look at and these patterns, and that's primarily what we're doing. Now, we were on the show last week. We were looking to be a seller of this Japanese yen at around the 99.40 level. If you'll get a chance to take a look at this chart, you'll see that at that point you had the lower tops going down on the hourly basis. That goes over a 3-day period, and that was telling you, at least from a technical point of view, that you were having some resistance come in. And then over the last couple of days, Thursday and Friday, we had a pretty good move. And then last night, the Japanese yen made a perfect 61% retracement to the exact pip at the 97.35 level, and now we've rallied almost $1,000, from that point. So once we go below the 97.35, we will expect the market to back off even more, because our original place for looking at this is the probably at the $90 level in the dollar yen. Because if you look at the long-term weekly chart, we had such a run-up, in the Japanese yen, the dollar versus the yen. We could easily back off 10%, which would be a 38% of the whole move, and that would make it, even a better place to look at it. But, I don't like to, if I look at a weekly chart, folks, the first thing I do is I go down to a daily, and then I break the daily down to 60-minute, and the 60-minute allows me to enter without risking very much, because this is a business about risk control. It's not about how much you can make. It's how much money you're not supposed to lose. And, that's the main thing that you have to worry about. I titled my newsletter this week is a quote from Bernard Baruch that I always use, and one of his favorite sayings that he told to Fanny Brice during the 1920s. She was the leading movie star at that time. He told her, that you really have you must be concerned on the return on your money, and don't be concerned on the return of your money. So that's a main thing to work out. And the other thing, she asked him, she says, how do I make money in the stock market? And he said, you buy low and you sell high. And she said, well, how do I do that? He says, well, you got to take about 40 years. And he said, then you'll probably understand a little bit of how it's going to work. We have a request to take a look at the Canadian dollar, so we'll take a look at that right now. That's one of the things that I was watching last night because we were having some good movement in that, and the patterns were quite nice. I think what I'm going to do is I'll focus on the daily first, and then I'll move it to the shorter term time frame as we get closer, to the break that we're going to take. But we looks like we're getting ready to make a really nice, ABCD pattern to the downside. What I'll do is I will make this into a 60-minute so that we can see it much easier, and it'll be a lot easier to pull up, and you'll be able to see the same pattern that in fact, it's almost exactly the same pattern as the dollar versus the yen. If you'll notice, you'll see these lower tops that we had in here, and that is very important because we're at major support now in the Canadian dollar. It must hold this level at this 101.20 level. Otherwise, it's getting ready to have a very, very serious move to the downside, in my opinion, because, it's on a longer-term basis. We've had some, serious corrections, and we've had some very, very strong down days recently, especially the last 4 down days in the Canadian dollar versus the U.S. dollar has been, it's been quite dramatic. And so we must hold this 786 level that we're trading at within a few pips of right now, the 101.30 level. And if we fail there, then we are looking at, something that could be, even a lot more sinister than what's happened over the last 4 days, because we've dropped, well over $1,500 in a matter of just a few days in this. So that's a thing to look at. Those of you that, don't trade Forex, you really need to look at it. That's the main thing that you want to look. We got to take a little break here. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I have posted into Tiger TV the New York Stock Exchange Index, and we're trading up at the 1.618 expansion of the September to May high, and that's the large ABCD that I've been watching for quite some time. But the thing that I wanted to focus on here is the gap that we had on around New Year's Eve. As we went into the holiday season, we left that monster gap. It was 20 points in the S&P, and that has left a huge gap. That gap will be filled, folks. I don't know when it'll be, whether it's in my lifetime or not, I'm not sure, but that gap will be filled. But the key is, after we had that 4-day correction that ended, around the 19th of April, that's when Apple was bottoming on April the 19th. That was the Friday, and we hit that exact 61% on the New York Stock Exchange Index. And for the last 6 days, we have been moving sharply higher. We've taken out the highs of last week, and as Basil said, it's very difficult to be bearish this market when you have action like this. I don't do a lot in stocks. I do primarily Forex and futures are what I look at, but I do look at the overall broad market, and it looks like it wants to go higher. I'm not certainly going to fight it. I tried the short side of around 1587 in the S&P, and it went down about 12 points or so, and then immediately came back, and I said sayonara when I got the break even. But that's what it looks like right now. That there's just really difficult to be extremely bearish. But I can't, like Basil said, you can't put the party hats on yet because it's still early in the game. If this is a bear market, and I'm not so sure that it is. But the one thing that you got to do is you've got to look at the overall picture of everything. And if you look at the Nasdaq chart on a long-term weekly basis, you'll see that we are just making that same 1.618 expansion number that we talked about here, and this is a 3-drive pattern that's also forming, and it's coming in at the 50% level of the move down from March of 2000 down to the low we made in, I believe, 02, and that was around July. And so what we're doing now is we're making that, we're actually within about 4 points on the NASDAQ of hitting that exact number. So we'll see what happens. As far as the astro things that, the cycles that I watch here, we had that cycle come in last Thursday. It looked like it was going to be, some type of a move. And so what we saw was just a one-day correction, basically, which was pretty much nothing. And then we'll see what moves, from that level. So someone just asked me the question if I thought that Apple was going to hit, $440 a share today. And when I started the show, I don't know, but no one else does either. All I know is that 440 is a very good AB equals CD pattern that gives you a really nice price objective. And so we're only when I came on the show, it was 420 now, and now it's 433. It only has $7 more to go and 4.5 hours to do it in. And remember, this market is still very, very oversold. And so, whether it does that or not, who knows? But we'll wait and see, if in fact it actually does that. So we'll see, I'm repeating myself here. But we'll take a look at it, and we will find from our history whether it's going to be, the correct thing, to do or not. Now, in the currency markets, we want to watch the dollar index here because we are at a really critical level in the dollar index, and we will take a quick look. And we're getting down to some real serious levels here because if we get much lower than where we are now, we're going to be forming our first really good ABCD pattern in the dollar index for some time. As we pointed out, the butterfly top that we made back in July, which was the high in the dollar versus the euro, that's when the euro was trading down at the 120 level. What we've done now is we have we rallied up to the 786. We talked about that 83 level many, many times. And now what it looks like to me is that we have the potential, if the market doesn't hold the lows today, we've been down for 4 days in the dollar index, and if we don't hold the 82 level, that's going to set up a move to just below the 81, right about the 80 level. And that will be a beautiful ABCD pattern, and that will be in a bull market. And so you would really be hard-pressed not to buy that U.S. dollar if it gets down to that 80 level. That would be equivalent to, in the euro, to probably close to the 133 level would be my estimation of what it should be doing. Now, I will post that pattern into Tiger TV so you can take a look at it, because you'd have higher bottoms from September, and then you had a higher bottom in October, you had a higher bottom in December, you had a higher bottom in February, and this would be a much higher bottom, coming in around this 81 level if we get to it in the U.S. dollar index. So that's something that we want to keep in mind as we, get ready to look at these. And these are really, Forex is such a wonderful trading instrument because it's open 24/7, and it gives you plenty of opportunities to, look at the different patterns that are there as we look at the charts each day. Now, I know everyone has a really strong interest in the gold market, and so we really need to take a look at that because, the gold. We assumed that the gold was getting ready to have a little correction this week, and so far that's what's been happening. I think the best way to do this is I'll do the daily chart on gold, and because let's look at the weekly first because that was a beautiful picture, and we're almost in the same situation now that we've had with Apple, and I think if we take a look at it on a longer term first, and then look at it on the shorter-term basis. But when we came down to that 1322 level, the number we were looking at was around 1365, as I recall, and it had that big drop on that one day, which was the 19th. That's for the day that Apple and the stock market also bottomed. But we did have a very strong move down at that point. And now what we're looking at is a potential for the market to move up to the first, big rallying point. And every time that, gold has had these breaks, it's had 1, 2, 3, 4 of them since it topped in August of last year. And all of those breaks have been almost $300. In other words, we've come down from a high in gold from 1937 down to let's say 1327. So it's dropped well over $600 an ounce. So rallying back $300 an ounce is only a 50% correction. And so the first level of that would be around 1560. That would be the 50% correction off of the high we made in October from that 1760 level that came, back down. Remember, we got very bearish gold once it broke the 1565 level, because that broke that last 786 retracement level, and then we had that really quiet 4-week rally right in the midst of the thing that was going on in Cyprus. And, we talked about this, and Basil talked about it, Steve Rhodes talked about it, is that when gold doesn't go up on, no news that should make gold go crazy, it only has one place to go, and that is to the downside. Someone asked the question, was that triggered by the Goldman Sachs report? I didn't know of any Goldman Sachs report. It might have had something to do with it, but whether it had, $230 an ounce to do with it, I'm not sure. But we've come back, from that. We've come back $150 of that $300 break in gold in a matter of just, 7 trading days now. And so that tells us that, something is really, really happening in gold. And it's given us every indication that, that it wants to, to make it. Now, I'm going to put the 60-minute chart that gives you a really good idea of the shorter-term ABCDs. This is breaking it down. I went from a weekly chart. I just skipped the daily because it's moving so fast. These swings are big, and you have to, modify your risk. But we made a perfect ABCD on Thursday at that 1480 level, and then we've had a little bit of a correction here. And as long as we don't get above the 1480 level, I think we still have one more chance to have a nice correction of maybe $100 an ounce to the downside coming into that 61% retracement. There's nothing bearish about gold looking at this hourly chart going back to April 15th. I mean, we talked about the first correction, and that came in at the 1340 level. That yielded, a quick $60 an ounce, and then we backed off to the 382, and that led to the 1480 that we hit last Thursday. And now we're waiting to see, what the next level is going to be, because it's making just normal corrections, folks. And if this were really bearish, gold would not have rallied 11 days. It's, we're 11 calendar days, actually more than that. We're 2 weeks. We're 2 weeks off the bottom in gold, and it's still $160 higher than, the bottom that was made. So something, big has happened in the gold market. Now, silver's rallied somewhat also, but not nearly as much as the gold, so you have to, keep that in mind. But, the gold still looks, it's beginning to look more and more bullish as we walk through these swings that we're having in the gold. They're just, the one thing that is interesting if you're a trader like I am on the shorter term frames, we are finally, we're getting a little less volatility the last few days than we had over the first few days after the bottom was made. So we'll be able to see if that's, that's good. Someone asked a question about the fact that the corn and, the grain markets are very strong today. We'll cover that on Thursday's commodity show, but that's weather related because there's a lot of water through the Midwest and the farmers can't get in the field, so they're not able, to plant the corn. And this is getting, if you don't have your corn in by May 1st, you're really getting into some problem areas because, corn thrives during May and June, and, the old adage is corn as high as an elephant's eye on the 4th of July. if that doesn't happen, then your corn yields drop. And remember, we came off of a drought year last year that we were able to take advantage of, and we're waiting to buy it again. And our goal was to buy it, sometime in May. And so we're waiting for that buying opportunity in the corn market in May. We'll use our friend Rich Anderson at Anderson Capital Management to help us pinpoint, some of the fundamentals that might come into play here. But at the present time, what we really just need to do is to focus on the, waiting for the time frame to, exit or to enter without, risking too much. That's the main thing that we want to be looking at. Someone asked me to take a look at silver, and I would certainly do that. I'll probably do it on a shorter time frame so that we can look at them both together, silver and gold, and you can see that, the gold is, far stronger than the silver. Yes, I've got that right here. We've been watching that for quite some time. We've been following it quite a bit. And you'll notice that the red line on this chart is the silver chart, is the gold chart, and the red line, I had that backwards. The red line will be the gold chart, and the silver will be the bar chart. And you can see that the price of the silver has been lagging the gold by, quite a bit. And that's normal because silver is an industrial metal. It's not, it is a precious metal, of course, but not so much as it is with gold, because you can carry, a couple $100,000 of gold in a watch pocket. You can't do that with silver. You have to have a trolley to do that. And so it's interesting to realize that that's why they're so different. But silver is a beautiful metal, and the coins, I love silver coins. I think they're, one of the most beautiful art treasures that you can get if you're, if you're interested in doing that. We got a call from Vince in New Jersey. Are you there, Vince?
Yes, Larry. Finally. My goodness.
What can I do for you, my friend?
That's some kind of. I know you're in a hurry. I'm always.
No, I'm not in a hurry. Take your time.
I'm always able to catch you at the last minute. It's a conspiracy. I've been trying to get through to you, listen to your show.
Well, you have to pay the guy that answers the phone, and they'll let you in right away.
No, it's the rehab guy.
Yeah. What can I do for you, my friend?
And I go at 12 o'clock. I said, wait a minute, I don't want to. I got to hear my friend. 12 o'clock is no good. He said, no, you're on the schedule for 12 o'clock. So I'm home now. I'm feeling better.
Good.
And, at 11:15, my very best friend, besides you, called. And I said to Jackie, I'm going to miss Larry. This guy, we just finished talking. Anyway, we'll go someplace else. But I wanted you to tell that. I wanted to tell you that. I'm always trying to get through to you, and there's always people at dinner or lunch or rehab or whatever.
Well, we're here today. What can I do for you, my friend?
Am I been to your ear? How have you been?
I've been okay. Everything's good.
Yeah. Well, I'm asking about Frank A. Sam.
FAS?
Yes. S.
Okay.
Yes.
I'm showing a very large gap on my chart. I don't know. He must have done a reverse split in this stuff. That's what it looks like to me.
FAZ, S.
FAZ or FAS?
No, FAS I asked about, but FAZ did a reverse split too.
Okay, FAS also did it. Vince, we got to take a break. Stay with me, and we'll take a look at this when we come back, okay?
And we'll discuss getting my hands on the Bradley model.
Okay.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back. Vince, are you still there?
Yeah.
Okay, I have a little static on the line, but I did post into Tiger TV the Bradley stock market model, and it looks like, we're still heading higher. And, we're in the time period where the old adage, sell in May and go away. That could go all the way to May 31st without any trouble at all. So the Bradley date, I believe, is June the 10th. But it's, this market is just very difficult to sell because it's pretty strong. That's basically the bottom line. Did you have any specific questions about the Bradley, Vince? Or?
Well, I would like to get a copy of that somehow.
I think if you go into Tiger TV, you can get it there, or you can email me, at larry@tradingtutor.com, and I'll send you be happy to send you a copy of the Bradley model overlaid because, it's sometimes, when it works, it does a great job. It does a good job with short-term cycles, highs and lows, and on a long-term basis, it's about 70% accurate. And but you have to worry about the inversions that occur, of course. But it's a good tool. But if you'll just drop me an email, Vince, at larry@tradingtutor.com, I'll be happy to send a chart out to you.
I just want to say one other thing, Larry. Sometimes I sound like I ramble out, but you are talking to a man who'll be 80 years old in 6 months. So,
That's pretty good, pal. I hope I make 80. I've only got 7 years to go, but Feeling pretty good, but we'll see what God
I
has
almost
to bring
didn't
me, but
make it,
we'll
Larry.
go from there.
As I said, I almost didn't make it.
I know that, but you pulled through. That's the good thing.
That's right. You
All right,
know
listen, thanks for calling in, Vince, and keep me in your prayers, okay, as I do you.
Thank you, Larry. And I'll be trying to get through to you again.
Okay, my friend. Bye-bye.
All right,
I'm
bye.
going to end the show by putting a chart in on DBA, which is one of the ETFs that you look at for commodities, and we will put that into the chart room. And you'll see that we're making some type of a double bottom from last May. Remember, last May is when we had the beginning of the drought thing, so we'll be watching that, very, very closely. But we are having a great deal of strength in the grains today, because of the wet weather across the Midwest, and that across the Midwest. But that wasn't unexpected. We talked about that last Thursday, as they were making, starting to make higher bottoms in the grains. And, we'll have plenty of opportunities to, get in the grain market if this drought thing turns out. We don't really need much of a drought because, we have less supplies than we've had in a while. So we'll see. But anyway, that's what we're looking at for today. I think we're getting really near the end of the show here. Oh, someone asked one more comment about Apple. Would I be willing to short Apple at the 1440 level? Excuse me, 14. Wow. I don't think I'd sell it there. No, at $440 a share, all it's doing is it's making an ABCD since the low we made of April 19th. We went from 385 up to 428 after the earnings. We dropped down from 428 down to 391, and that AB equals CD parallel move, known as the Thunderbolt, measures to 440, and we're at 433 right now, so we're only $7 away. That could be done by the time Daryl's done with his show. So it's it moves very, very quickly, but I would not sell it there because I would look at it at a shorter time frame, go down to a half-hour or 5-minute chart to find an entry spot where I don't have to risk $10 or $15 a share on the Apple, because I watch it that's the only stock that I watch actually, and whether that because I basically trade Forex and futures, but I do look at Apple just because of that big pattern that we've had. That's it, folks. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.